What's going on, guys? So in this video, we're going to be looking at take profit and stop loss levels. We'll be looking at various examples of where we use them at different situations, and some statistically reliable forms of using the take profit, which is our 90% level, which we'll get into in a minute. So let's get into this. We're on Euro USD on the daily time frame. So let's go ahead and look at price action right here. So we can see a double bottom zone is being approached right here. So this is our double bottom zone. I can go ahead and mark this off. Price is approaching this double bottom zone, so we're going to be looking at this zone for possible long positions. So this is a good example to see, okay, how is price approaching this level? Because this is a key level. Are we going to be approaching this impulsively, or are we approaching this correctively? And we can very clearly see here that price is correctively moving. You can see we have this impulse move, and then we have the correction. So this is our correction right here. We can see this is a descending channel. So I can go ahead and label this structure. And the descending channel, as we know, is a reversal pattern. So by combining what we know about reversal patterns and this double bottom zone, we can anticipate that there's a very good chance that price is likely to move up or reverse. So this is where a 90% level comes in. So we like to use the 90% level when looking at descending channels, descending wedges, ascending channels, or rising wedges. We found this a very profitable and statistically reliable way of looking at take profit zones. This 90% level we have learned from Falcon Trading, and we've implemented this into our trading strategy as it is very profitable and very reliable in many situations because the 90% level states that 90% of the time price breaks out of these patterns, it will reach where the pattern or the structure first began. So in this case, it would be right here. This is where this corrective structure began to take form. You can see right here, I labeled on the top of the wick, and we use our ray line to identify this. So this would be the 90% level. This is meaning that when price breaks out, there's a 90% chance that price will reach this level. And this level is not to say, okay, this is where we're going to set our take profit indefinitely, and price is only going to reach here and it could reject. That's not what it's saying. This is saying that 90% of the time it will reach this level, but this is the minimum level. Because we know this is a double bottom and a reversal pattern, we wouldn't just be targeting this. This would be our first take profit level. And depending on who you are as a trader, obviously everyone has different ways of trading. Some people like to hold short or long. People have different opinions on how they like to take profit, but this is how we implement the strategy. We would target this area, but it's not necessarily meaning we would just set our take profit here and we'd be out of this trade, because this could be a very profitable trade. We can see on a daily time frame, this is a very strong structure. That means we could be moving up higher. So we would target this level initially, but it's not to say we would just take profit here. So let's go ahead and keep price moving a little bit. So we can see price clearly broke up and impulsed up. So let's look at where we would have entered this trade. So I'm on the 4-hour now. So I would place my long position on the breakout right here. Breakout, and I would place, my long position. So I would have placed my long position here on the breakout of this reversal pattern, and I can go ahead and update that. And I would place my stop loss below the previous low of this structure. So if I was in a short position, I would place it above the previous high. But for this case, I would place it below the previous low, which is right here. So we would initially target this level, which is the 90% level, and this would give us about a 3% risk to reward. So we can see very clearly, let's go back to the daily time frame, that when price reached this level, this was a 90% probability that it would reach this level. You can see price impulsively broke this level. So we would say, okay, this is showing very bullish pressure right here. So we would look to hold on to this trade. We wouldn't want to close this because there'd be no reason to close this. We can see very clearly we have strong reversal patterns on a higher time frame. There would be no reason to close this trade. That's one of the biggest things new traders struggle with, is cutting losses too early. You want to cutting winners too early. You want to cut losses early. You want to let your winners run. That's how you become profitable in the long term. So in this case, why would we want to settle for 3%, even though that's very good, when we could catch a much larger move? So you would say, okay, what would be the next zone we would be targeting then? If we're not going to be looking to take profit here, what would we target next? So we would look to identify key levels, such as outer structures or double tops or double bottoms. So here we can see this is a double top zone. So I would say, okay, I want to look to take profit up here because this is our next level that we're looking for. So let's go ahead and adjust this. And like we said, you can look, depending on what type of trader you are, you can take profit here. 3% is great. But if you want to maximize your gains, you want to be paying attention to, okay, what did price do when it reached this level? Did it show any signs of reversing or moving down? No, we can clearly see a strong bullish candle right here, and it broke this level. So why would you want to cut your losses short when you could capitalize on this, on a big win? So here we'd be targeting this level, which would give us a risk to reward of 1 to 10. So we're risking 1% and we're gaining 10%. So let's keep price moving and see how we adjust. So we can see here, we've had our impulsive move up, and then we had a correction. So let's go ahead and identify this. And because we know we're now in bullish territory, we had this double bottom, we had a reversal pattern. So we're saying, okay, we're looking for long positions, we're looking for buys. So I would have identified this correction right here as a bullish correction. This is a bull flag. We have the clear flagpole or the impulsive move up, and now we have the correction. And so we can also use our 90% level on this bull flag right here. We can initially look to target where the start of this correction was. 90% probability that price will break out and move up to where the correction started. So we would have placed our ray line right here at the top of the wick, and this would be where our first take profit would be at if we were looking to take profit there. But because we know that this double top zone is where we are initially looking to take profit, this is our key level. So this is where we want to look to take profit. But like we said, depending on what type of trader you are, you can look to take profit here. Unless price shows me otherwise, there's no reason why I would want to take profit here, unless there was on a smaller time frame, maybe a head and shoulders pattern right here. Then we could adjust and see what we want to do going forward. But if price isn't showing me that it's not going to go down from here, there's no reason to take profit there. But because that's our 90% probability level, that would be our first area we'd be looking at. So let's look at a 4-hour time frame where we would have entered this position. Go ahead and adjust this. So we would have looked to place our long position on the breakout right here, and we would have placed it below the previous low, which was right here. And you can see price came down a little bit, didn't come to our stop loss. Our first initial take profit level would be around this area. But because we know that this is our key level up here, this is going to be our main target. And that would give us around a 7% gain. You can see right there, 7%. So I'm going to bring this in closer. Let's go back to the daily time frame and let's keep price moving and see what happens after this. So we can see price continued to move up. It impulsively broke this level. So we can see right here, when price broke this 90% probability, it did reach this. There's a 90% chance that it's going to reach this when it breaks out of these patterns. It did reach it, but what did it do when it reached it? Because it didn't quite reach it here, but right here we can see very bullish pressure broke through, just like this example, broke through very impulsively. So I'm thinking, okay, why would I want to take profit here? It looks like their bulls are in full control. We have clear bullish momentum, double bottom, reversal pattern, a bullish correction. And so this is our area we're taking profit at. This is what we want to look at. So let's keep price moving. And you can see price is approaching this double top area, and we have reached it. So we can see right there, 2 entries. That's about 17% gain you would have made on one trade alone. 2 trades, but 1 analysis on this trade. So now let's see what price does next. Let's see if we can identify any more take profit or stop loss levels. So we can see price is moving very correctively. So let me identify this. I'm going to delete these lines to make it more clear. Go ahead and delete these. So right here we can see price formed a ascending channel. Let me go ahead and identify this so you guys can see this. And what do we know about ascending channels? Is that they are reversal patterns. So we can see, okay, we reached this double top zone. This is where we were looking to take profit. We can see price clearly reach that level. So what do we want to do when we see this ascending channel? Let's back this up a little bit. So we say, okay, price broke out of this ascending channel, which is a reversal pattern. So where's our target? Where are we going to take profit at? Where are we going to look to take profit? So I'm going to grab my ray line, and this is where the initial move started. This is where this correction, this is an ascending channel, the beginning of this move. There's a 90% probability that price will reach the beginning of this move after breaking out. So this is going to be our take profit level. You can see if I zoom out a little bit, very clearly seen. So let's go ahead and look on the 4-hour and look where we would have entered this position, because we want to take part in this move because this is a reversal pattern. So we can clearly see on the 4-hour, right before we broke out of this structure, we want to see, okay, how is price approaching these key structures? Someone could say, okay, how did you know that price was going to break through this level? Why couldn't it have rejected? Why couldn't it have moved back up after it rejected this level? Well, let's go ahead and look at the 4-hour. Okay, how did price approach this key level? Did we approach it impulsively or correctively? We can very clearly see price formed a bearish correction at this level, which is a reversal pattern or a continuation pattern. So we could say, okay, this is showing us that price could very likely break out of this level. So we could have entered on this position after it broke out of this bear flag. So I would have entered here, and my stop loss would be above the previous high of this structure. So you can see I'd give it a little cushion just in case price wicks up. And our take profit would be at the 90% level, because we know there's a 90% probability that price could reach this level. So let's keep price moving, and let's go back to the 4-hour. Let's see if we have any more opportunities to enter this trade. And when we get into the next section, we're going to be talking about trade management and how to look to do scale-ins. We've kind of touched on it a little bit, but we'll look at how to scale in, different ways to do that, and how to protect your capital. You don't want to be trying to scale in every position because you're not going to catch all of these. You can see clearly we have an impulse correction. We could have taken part in those if we wanted to, but you're not going to catch all of them. That's something you have to understand. There's going to be so many opportunities in the market for you to take advantage of. If you didn't catch this entry right here, somebody would be like, oh man, I missed the trade. But look how many chances price gave you to enter this trade. You have an impulse correction. You could have entered all of these trades. So you should never have FOMO, because you know the market's going to give you more opportunities to enter a trade. And if you don't, there's other pairs, there's other setups. So there's never a reason to have FOMO, because you can see I just identified 3 different entries in the matter of 100 pips. So let's keep it moving. Let's see if we have any other entries. Okay, we can see here price is forming a larger correction. So let's see how it plays out. Okay, so we have a larger correction. We can see this is the impulse move. What happens after an impulse? We have this reversal pattern, a bearish impulse, and now we have our correction. So we could have looked to take part in this on a scale-in, which we'll talk about a little bit later. But for now, let's just look at the take profit and stop loss levels. So let's go to the 4-hour. So I could have looked to enter this trade on the break of this pattern. So I would have likely had a sell stop under this structure, would have probably got tagged in right here. And my stop loss would be above the previous high of this structure. And my take profit would be at the original 90% level, which on the daily, you can see right here. This would give a 3% risk to reward. So let's keep it moving, and let's see if price reaches this level. Okay, we can see very clearly price broke this level impulsively. So this is another example of, okay, we could have closed out one of these positions. If you want to secure profit, again, that's up to you as a trader. Everyone has different ways of going about that and securing profit. But we could have looked at this level and say, okay, like our other examples, how did price approach this level? Because this is our take profit level that we're initially targeting. We could say, okay, price clearly impulsively broke this level. We're seeing a lot of bearish pressure. So we would have likely kept this trade, because we know this is just the minimum that price has to reach. This is the 90% level, saying that 90% chance that price will reach this level, but it's not saying that price will just reject and reverse. This is just saying this is the minimum that we're looking for. So let's keep it moving, and let's see what happens next. So price continues to move down. let's see. So let's take a look at this correction right here. Say we look to enter another position because we see another correction form. Let's go back to the daily. We can get a better view of this. So right now we can see, okay, we had an impulse, correction, impulse. Now we have another correction. So if we wanted to look to enter this trade, we can see we could have entered right here. So somebody would say, okay, where's our next take profit level? How do I know? I don't have the 90% rule to go off of right now. So what's my next take profit level? Well, if we look at this overall move, this is the move I am defining. If we look at this overall move right here, let's go ahead and draw our trend line from here. We can see that price broke out of this uptrend. I can go ahead and delete these. We can say, okay, price broke out of this level, so what's the next level I'm gonna look for? Same example over here. This was our minimum 90% level, but we're targeting the overall double top zone. In this case scenario, we're gonna be looking to take profit down here at the double bottom zone. So let's back it up a little bit to where this correction was. So I'm gonna be looking to take profit at this key level, which is our double bottom zone. So this is the level I would be looking at. So when we entered this trade, let's go ahead on the 4-hour to look for our entry. So you can see this was our correction. I can go ahead and adjust my trend lines. I would have entered right here on the break, and I would place my stop loss above the previous high. And when we're looking to enter, we typically look to enter on the 1-hour. I'm just doing this for example purposes. So this stop loss would likely be somewhere around here because these 1-hour candles are a little different. So we're at the 4-hour, it says there's not a candlestick right there. There could be a low right there that I could place my stop loss on. So let me back up real quick. Let me zoom back in here on the 4-hour. So we can see I would have targeted this level down here, which was our double bottom zone. This was our key level that we want to look for. And this would give us around six risk to reward. So you can see just a little bit above that, so that'll be 6% gain. So let's go back to the daily. And let's see how price action moves further. You can see price is starting to correct a little more, and then it moves down. So we could see this trade, because we didn't take profit at that 90% level, we said, okay, price moved down impulsively. So we would have moved these take profits, which would have been down here. You can see we have about a 20% gain on this trade, 10 on this trade, and about 6 on this trade. So you can see very clearly how effective this method can be when you target these key levels. Also using the 90% level, very helpful in maximizing your gains, because when we had this 90% level in here, which was right around here, this was our minimum take profit. So we know, okay, there's a 90% chance price is going to reach this level. But because we know price can reach down here, which was our key level, we could have held this trade, because you can see there was no reason. Price didn't move all the way back up here. Price just kept moving down. So why would we want to cut our winner when there's showing no signs of bullish pressure? You can just see time after time, impulse correction, impulse correction, impulse correction, impulse. So a lot of times, like I said earlier, a lot of new traders, they see a little bit of profit and they want to get out and run for the hills. But part of being a good trader is understanding patience and knowing when to let your winners run. That's how you become profitable in the long term. You can, depending on what type of trader you are, obviously everyone has a little bit different methods they like to go about doing these, but this is a very effective method which you can utilize to maximize your gains over a long period of time. So let's keep it moving a little bit more. Let's look at a few more examples. Okay, so right here, we could have seen, okay, we have a inverse head and shoulders right here. Very clearly, you can identify this. The left shoulder, we have the head and the right shoulder. And let's identify our neckline. We can see this was our neckline right here. And so this is another way we like to look at take profits for head and shoulders and inverse head and shoulders. Very effective, statistically reliable form of looking for your take profit zone. similar to the 90% level, but a little different. So let's show you. So what you would do is you'd grab your trend line tool and you would measure from the top of the neckline, which was right in front of this, to the very bottom of the head. So you would just line it up, and then you drag this trend line to where price breaks out. So you can see price broke out right here. Move this to the, a little bit to the right. So this would be our initial take profit zone right here at this level. And this is a method that a lot of strategies use. Very effective for inverse head and shoulders and head and shoulders. You simply measure from the length of the head to the top of the neckline, which was right here. And then you place that on the breakout, and that would be your first take profit zone. So like I said, every trader has a little bit different style on how they like to take profit, but this is where we would first look to identify our take profit. So let's see how price moves from here. And we can clearly see price impulsively broke up this level and it's approaching our first take profit zone, and that was hit. So let's look at where we would have entered on this trade. We would have looked to enter on the breakout. So let's grab our long position, breakout, and our stop loss would be below the previous low of the structure. So we can place it right here. And then our take profit would be this measurement from bottom of the, or top of the head to the neckline. That's about 3% reward right there on this trade. And you can see price hit this. So let's go ahead and delete this, go back to the daily and see how price further moved on. You can see we're starting to correct a little bit and price moves back up. I'm going to go ahead and delete a few of these lines so it can be more clear now. So let's see how price moves now. Okay, let's look at this example right here. So I draw this trend line. We're moving in an uptrend now. And so I can say, okay, let's back this up a little bit. We can see as price impulsed down to the bottom of this trend line, we formed a descending channel. Back this up just a little bit more before price moved. We see, okay, we have a little descending channel, which is a reversal pattern. So I could have noticed this, and if we didn't take part in this trade, let's say we missed this entry. Okay, price impulsively broke up, and now we have a correction. Correction in the form of a bull flag. So you can see I would have drawn it right there. And our take profit level would be this key level right here, which is the double top zone. So you can see, let's go to the 4 hour and let's look to see how we would have entered this. On this trade, you can see on this pattern, you can see price broke up. So we would have looked to enter right here. And our stop loss, again, below the previous low. And our take profit would be up here at this double top zone. And you might be looking at these pips and think, okay, this is a really large stop loss or a really large take profit. This is the daily chart, so these moves are a lot bigger. I'm just using this for example purposes. These patterns play out on every time frame. I could have looked at the 15 minute and done the same thing, but just for example purposes, I wanted to go on the daily time frame and 4 hour to just kind of give you guys an overview of places we look to take profit. So in this example, we would have targeted this double top area, and let's see how price played out. You can see price reach this level, and that would have been about a 3% gain. So as you can see, our chart looks very messy now, but you can see very clearly some of these take profit levels that we like to look at, how we identify our stop losses, which is if we're in a sell position, we want to place it above the previous high. If we're in a buy position, we want to place our stop loss below the previous low. And these patterns play out on all time frames, like we've already discussed. You might see a bearish correction on the 1 hour, or you might see it on the 15 minute. These patterns play out everywhere. So knowing these take profit levels and stop loss levels on a higher time frame really helps you to gauge how you can really capitalize on bigger movements. Because you might see a small ascending channel on the 15 minute, and you might say, okay, let me identify my 90% level. And that might be a 3% gain or something like that, for example, but you might not have seen the higher time frame structure. If we would have saw this little bull flag or this little bear flag in here and entered this position and maybe taken profit, right around here, we would have missed this entire move right here because we understood this higher time frame structure was broken. We didn't just look at this little bear flag right here and say, okay, I'm going to try to get a couple pips. I'm going to try to get a couple percentages on here. We're trying to maximize our gains here. So we would have noticed this higher time frame structure was broken. We have a clear uptrend, and then we have an impulsive break. So we want to target this double bottom zone. And obviously, we'll get into trade management in the next section. So we'll identify, okay, what happens if we identified this level and we were looking to take profit here, but price didn't reach that level and it started to reverse. So we'll talk about a little bit more on how to identify those reversals, how to protect your profits, secure profits, things of that nature. So we'll like I said, we'll get a little bit into that in the next section. And now we'll really be able to capitalize on not only these big profit moves, but securing profits, because trading is not all about just, getting profits and securing pips. It's about protecting your capital. That's the first and foremost, most important thing to focus on, is protecting your capital. That's why we use very strict risk management. And like I said, when we get into the next section, we'll talk about different ways to trail your stop loss to make sure you're securing those profits, and then various other things. So this was just a rundown on take profit and stop loss levels. Over the next few pages, we'll go over a few more examples of the 90% level and identifying outer structures. So I'll see you guys next time.